Hey, what's up, my friend? So, welcome back to today's episode where we will be discussing, right, the mistakes that you want to avoid when trading a small account. I get it, right? Most of us, me included, I started off with a really small account. And a mistake that many traders make is number one, they think in terms of the dollar amount. So, let's say, for example, you put in $100 into your account, $100. And maybe you make a trade and you earn $10 on the trade. And you're wondering to yourself, so much time and effort, energy to learn all the trading stuff out there, the MACD, the RSI, the chart patterns, the price action, for just $10 on this pathetic trade. Man, I'm wasting my time. Man, I'd rather work at McDonald's. Now here's the thing, right? If you focus on a dollar amount, then yes, it can be insignificant, right? $10 can't even get you a meal at a restaurant. But I don't want you to focus on a dollar amount. I want you to put things in perspective. Look at it in terms of your risk to reward. Let's say for that trade, you risk $5 on that trade and you get back $10. That's a risk to reward of a 1 to 2. Or if you put it from a percentage perspective, that's a return of 10% of your capital invested. That's pretty decent. Okay, but if you focus only on a dollar amount, the pathetic $10, right, then yes, you're going to feel horrible about yourself. But remember, your trading account size isn't going to be $100 all the way. You're going to scale up eventually when you become consistently profitable, when you're confident. From $100 could become to a $500 account, a $1,000 account, 10,000, 100,000. And when this time around, when you do a 10% return, you can see how the dollar value changed significantly. So when you're trading a small account, don't focus on the dollar value. It is going to make you feel horrible, right? So you got to change your perspective, right? Look at it, in terms of percentage. Look at it in terms of your risk to reward. Mistake number 2. Many traders, when they trade a small account, they think that is an end-all be-all. I'm going to take this $200 trading account and I turn it into 6 figures. So I'm going to turn it into 6 figures. Then I can quit my job, go to the beach, sip a pina colada, and retire. That's ridiculous. Right? The odds of that happening, right, it's pretty much even, slimmer than playing the lottery. It's very slim odds that could happen to you. So mistake number 2, right, is that, you don't want to just have a small account and just trade it as it is. You want to instead add funds to your account regularly over time. So let me give you an example why this is so powerful. So let's say, for example, you have a $1,000 trading account, okay? And let's say you do an average of 20% return each year. Just follow with me on this. After 20 years, right, that $1,000 account will be worth about $38,000, $337. You might be thinking, well, Rayner, man, your math is really good, man, Rayner. Well, that's because I have another screen here that gives me the exact number. So don't be too impressed, right? I have another screen to actually give me out the math number that's really ready for me. So anyway, $1,000 account, compounded 20% a year. After 20 years, is worth about $38,000, $337. Now, what if you were to, this time around, add some money to your trading account each year? Let's say this time around, again, you trade with a $1,000 trading account. But each year, you add in an extra $1,000 to your account. That's not a lot. That's about like $80, $90 a month, right? If you think about this. So $1,000 account, and you add extra $1,000 to your account each year. And again, right, same thing, right? You compound it at 20% return a year. And after 20 years, guess how much this account will be worth? Well, from the looks of things, it's going to be worth $262,000, $363. Can you see the difference? One, previously, it was about $38,000, and now you have about $262,000. All by just regularly adding funds to your account each year. That's the power of compounding. And that's how you get out, right, of trading a small account. Not by, trying to make that 1-2%, and snowball over time. Yes, you can, right? But if you really want to kind of see the big money, you got to be willing to add funds over time to your account. Okay? Next one, mistake number 3, is that when traders trade a small account, they don't treat it seriously. Their thought process, after all, that's only a $100 account. That's only $200. I can afford to lose that. Now, here's the thing. If you have that mindset to start with, and eventually when you trade larger amount, $1,000, $5,000, $10,000, guess what? That mindset will be brought along, right, to your larger size trading account. That mindset will be the same. And if those habits, those thought process of yours, right, that you had back then when trading a small account, and you bring it over to trading a larger account, it's going to be a disaster. So yes, I know the account size is small, but you got to treat it seriously. Because if you don't nail down the thought process correctly, right, all those bad habits, all those mindset will be brought over when you trade a larger amount of money. And this time around, the damage will be even more painful. And mistake number 4. So this largely applies, I wouldn't say so much to people trading Forex, but more for people trading stocks. So from where I'm from, right, Singapore, you'll be amazed, right, to know that the brokers down here, right, they still charge an average of commission of about $20 to $25 per trade. So for example, I buy 100 shares of one of the local stock down here, say Singtel. I gotta pay like $20 to $25 to buy, commissions to the broker. And if I sell, I gotta pay another $20 to $25. I think let's keep it at $25. That's I would say it's a benchmark price point. So can you see that if someone has a $1,000 account, you buy $25 in commission, you sell another $25 in commission. That's $50. That's about 5% return, right? I mean, that's about 5% down, right, from your trading account. So this is just from a Singaporean perspective. If you are trading in the US, you got Robinhood, you got all the other stuff like that, that will, have almost zero commission costs, right? So that's fine for you. But be aware, right, people from other parts of the world, if you're trading stocks, commission is still a very real thing, right? You got to take that into consideration, because again, if you have a $1,000 account, you're paying $50 to commission, it's going to be very darn difficult, right, to even break even on the account, right? And the more you trade, right, the faster your trading account capital is going to get eroded. So pay attention to the broker that you're choosing, pay attention to the instruments that you're trading, pay attention to the transaction cost, right, that's incurring, right, as a percentage of your money that, or rather as a percentage of the capital that you are trying to invest or trade with. That's important. And finally, mistake number 5. Many traders, they don't learn from their mistakes, right? You're not learning from your mistakes because after all, it's a small account. Rayner, it's a small account. I can afford to lose it. I can afford to, average into my losses. I can afford to widen my stop loss. After all, it's only a small account. So as I've said earlier, right, if you have that mindset, right, if you don't learn from your mistakes, if you keep making mistakes when you're trading a small account, guess what? When you trade a larger account in future, the mistakes are still going to be there. You're not going to change, right? What makes you think that you're going to change just because you're trading a different account size? No, that mindset, that thought process, the bad habits is all going to be carried over when you trade a larger account. And that's when disaster strikes, right? That's where, your hard-earned money, right, are just, vaporized just like that. Those money could be better spent on your family, your house, or whatsoever. So yeah, don't treat this like a game. I know the money that you're trading might be small, right? But whatever mistakes that you're making right now, whatever habits, bad habits, right, you got to break it right now when you're trading a small account. If you don't fix it right now, you'll never fix it at all. So treat this as a business. Okay, so a quick recap, right, to the mistakes that many traders make when they trade a small account. Number 1, they focus on the dollar amount. Don't do that, right? Focus on your percentage return instead. Focus on your risk relative to returns. Number 2, not adding funds regularly to your account. Number 3, they don't treat it seriously. Number 4, they choose the wrong broker to trade the markets. They're trading the wrong instruments for their given account size. And number 5, they don't learn from their mistakes. And don't let this happen to you, right? I know if you're watching this video right now or this podcast, you know that you're serious about trading and this is not going to happen to you. So with that said, I wish you good luck and good trading. Until next time.